Joining me now for a closer look at this and other stories in the marketplace is Larry Tentarelli. He is the Chief Technical Strategist at Blue Chip Daily Trend Report. Larry, thank you for making time to chat with me about this. Give me your reaction to the Moody's downgrade.
Doug, thank you for having me on. So I believe the Moody's downgrade is going to turn out to be a non-event. As you said, two other rating agencies have already downgraded the U.S. over the years. And as we look at the market reaction right now, the S&P futures are down about 0.6%. 10-year Treasury yields have moved up about 5 basis points. So we may see some short-term volatility, but I don't think that this is going to be a major event whatsoever.
But the timing comes as Congress debates even more unfunded tax cuts. Do you think this in any way influences the conversation in Washington?
It might to a degree, because I do think it puts upward pressure on bond yields. So to a degree, it might, because it is still a major news event. So to a degree, yes.
Well, you mentioned the upward pressure on bond yields, which reminds me of the situation a while back with Silicon Valley Bank. Do we have to be concerned if we get a backup in yields to a meaningful degree about the way in which some of the regional banks or other financial institutions are exposed to U.S. Treasuries?
We'd need to see 10-year yields break out over 4.80. Right now, they're trading at about 4.48. And I don't know that this is enough of an event to push yields to that breakout level. So it's always a possibility, but I would say it's a very remote possibility that we get a major breakout in yields from this.
Let's talk a little bit about what's been going on with the global economy as the Trump administration works to rearrange or re-engineer global trade. How do you understand the tariff story at the moment? Are we closer to a resolution, do you suspect, or does this have the potential to drag on for a while and do a substantial amount of harm to the global economy?
My expectation is somewhere in the middle. So my expectation is that this will not be a quick fix. It could drag on as far as the process for a few months or longer. Scott Bessent recently said that he thought it would take 2 to 3 years to get a full China trade deal. So the process could take a little more time, but I think what the markets are really focused on right now is the news cycle. And about 6 weeks ago, the markets had really priced in worst case scenario and a global economic slowdown. Over the past few weeks, because of positive news headlines that have come out, I think a lot of pressure has been taken off global economic expectations. And I think the markets are adjusting right now to the expected tariffs.
We talked about the possibility that this Moody's downgrade will negatively impact U.S. equities. You cited the S&P E-mini futures contract a moment ago. But if you look at what happened Friday, equities capped their second best week of the year. Fair amount of optimism maybe about the trade deal. And I was struck by the fact that the market seemed to overlook not only the slump in consumer sentiment, but a real spike in inflation expectations. I think we're at the highest level right now in about 40 years. What is the risk, do you think, for the U.S. equity market in the next 3 to 6 months?
The two biggest risks that we face, number one would be if there was any major walk back in the progress that we've made with China in the trade negotiations. That would be number one. The second biggest risk, if for some reason the economy started to slow down drastically, if the jobs market started to weaken, which it has not. The labor market's held up very well. I think the disconnect with inflation is inflation expectations are based on consumer sentiment. But if we look at the actual data that's coming in, CPI has come in below forecast for the past 3 months. PPI came in negative last week. So the consumer expectations may be bearish, but the actual data that's coming in has been trending lower.
But you could make the case that we have yet to see the tariffs really bite. I think Walmart last week said it was going to raise prices. The president kind of pushed back against that notion. Is there the risk that these tariffs will, in fact, produce higher inflation that the market is right now maybe underestimating a little bit?
Yes, there definitely is. The tariff effect is going to have a lagging process as far as when the tariff kicks in, when the tariffs kick in. So although we haven't really seen higher inflation yet, this is going to be a process, not an event. So we do have to stay cautious over the next few weeks or over the next few months that inflation doesn't break out higher.
So when it comes to the Fed, what is your thinking? Do they take a very, very cautious stance here? And if the market right now is expecting maybe 225 basis point rate cuts, that's about right? Maybe the risk is that we get fewer than that?
Yes, I believe that the Fed is on hold at least until September. The Fed funds futures market is pricing in the first rate cut in September. But I believe the Fed can be very patient right here. They don't have to be in a hurry to cut rates whatsoever. The economy is holding up well. The labor market is very strong. And inflation is still above the long-term forecast. So I believe that the Fed is going to be very patient. I believe they're going to want to see no negative effects from the tariffs. So I believe they're on hold for the time being.
I'm curious as to how you're viewing opportunities offshore right now. Are there places to put money to work?
Definitely. So China has turned up recently. The Taiwan market is back over the 200-day moving average, and they're heavily tied to semiconductors. Semiconductors had a very strong week last week. Taiwan semi was very strong. India has turned up recently over the past few weeks. That's back over the 40-week moving average. And Korea's been acting very well. So I'm seeing opportunities in China, India, Korea, and Taiwan.
I'm curious, Larry, about the measures of conviction that you use in your work. What are they?
What I look at is price trends and weekly price moves. So what I'm seeing in the S&P 500 and the Nasdaq 100, very, very strong conviction moves. What we saw last week is the S&P 500 and Nasdaq 100 both closed over the 40-week moving average for the first time in quite a few weeks. They did it with a very strong move. Both indices were up by over 5%. The 40-week moving average is rising. The 10-week moving average is rising. So when I look at these weekly chart trends, these are very strong moves that we're seeing.
Larry, we'll leave it there. Thank you so much for joining us. Great insights from Larry Tentarelli. He is the Chief Technical Strategist at Blue Chip Daily Trend Report, joining us here on the Daybreak Asia podcast.
Welcome to Blue Chip Daily, one of the industry's premier sources for high-level daily technical and trend analysis. Blue Chip Daily is ideal for both investors and traders of all time frames who want to be on the right side of major market moves and trends. We focus on over 750 large cap stocks, all major stock indices, over 70 exchange-traded funds, bonds, oil, gold, and Bitcoin. Sign up now for Blue Chip Daily, and you will get access to real-time portfolio alerts, premium Twitter page with intraday alerts and commentary, the chart of the day with best idea, daily video and report, and much more. Claim 30-day trial at www.bluechipdaily.com. Subscribe to the Blue Chip Daily YouTube channel for more technical and trend analysis videos and other content.